Today we're diving deep into Strategy's digital credit vehicle, a revolutionary system built on Bitcoin. They are more than just a Bitcoin treasury company. They are creating a financial engine designed to deliver predictable dividends, support long-term growth, and integrate seamlessly across multiple markets. At its core, the company exists to sell digital credit. The flagship product is called Stretch, a treasury credit instrument that pays monthly dividends. Beyond Stretch, there are 4 other credit instruments: Strife, Stream, Strike, and Stride. Each is designed to meet different needs in the broader credit market, providing investors with options tailored to their preferences. Now, the engine behind these credit instruments is Bitcoin. Strategy holds $59 billion in Bitcoin, which acts as a reactor powering the system. Imagine this as a massive reservoir of economic energy. In theory, if Bitcoin traded flat at 0% annual return, this reactor still represents 74 years of energy to support the system. But Bitcoin is volatile. Its price swings can be dramatic, and volatility could threaten predictable dividends if there wasn't a safeguard. That's where the USD reserve comes in. Think of it as a battery. The Bitcoin reactor spins a generator to charge this battery, providing a steady, reliable flow of dividends. It's similar to how nuclear reactors power submarines, hybrid cars, or spaceships. They all use a reactor or engine to generate power and a battery to store and stabilize it. Strategy uses Bitcoin as the raw energy and the USD reserve as the battery to deliver smooth, reliable dividends regardless of market volatility. The key is that the dividends are decoupled from market volatility, making the product appealing even to risk-averse investors. Strategy can fund dividends by tapping 3 large sources of capital, choosing whichever is most efficient. The first is the equity market. MSTR shares trade about $3.6 billion per day, and the company only needs a tiny fraction, about 0.06%, to cover dividends. Even if the equity market is temporarily irrational or shares trade below their value, only a small adjustment is needed to keep dividends flowing. The second source is the Bitcoin market, which trades about $50 billion a day. Strategy only needs a tiny fraction, about 0.0004%, to fund dividends. This shows how deep and liquid the Bitcoin market is, providing plenty of backup if the equity market underperforms. The third source is the Bitcoin derivatives market, which has about $100 billion in daily liquidity. Strategy can use futures, call options, or other derivatives to fund dividends, needing only a tiny fraction, about 0.0002%. Together, all 3 markets provide a virtually limitless and efficient source of capital for dividends. Selling some Bitcoin to pay dividends doesn't shrink Strategy's total holdings. Small Bitcoin sales can cover dividends, while the proceeds from digital credit instruments are used to buy even more Bitcoin. It's like owning a big real estate portfolio. Even if you sell a few properties to pay out income, you can reinvest the cash and still control most of your valuable assets, letting your portfolio keep growing. The model is designed for growth. Bitcoin is expected to rise faster than the minimum needed to cover dividends, meaning the digital credit system can deliver steady income while still increasing total Bitcoin holdings. In other words, it doesn't just preserve value, it aims to grow it, giving investors predictable dividends and long-term Bitcoin accumulation at the same time. Now let's look at integration across markets, which is what makes this vehicle unique. Strategy doesn't operate in isolation. It connects the equity market, the Bitcoin commodity market, and the derivatives market. These three drives allow the company to tap the most efficient source of capital at any given time. The equity market provides flexibility for investors and allows the company to raise capital at a low cost when market sentiment is positive. The Bitcoin market is massive and highly liquid, offering a nearly infinite source of funding relative to the company's needs. The derivatives market allows for advanced financial instruments like futures and options, enabling strategy to fine-tune dividend funding and hedge against market swings. Together, these three markets are fully integrated. Strategy can dynamically switch between them depending on cost, liquidity, and market conditions. This integration makes the system resilient, scalable, and incredibly efficient. It also demonstrates a new kind of financial engineering where equity, commodity, and derivative markets are all used in harmony to support a Bitcoin-backed credit engine. The recent addition of the USD reserve further strengthens this system. $1.44 billion in cash acts as a stabilizer, smoothing volatility and enhancing creditworthiness. The management team can take up to 21 months to decide which market to tap, allowing strategic flexibility. This reserve ensures dividends remain consistent, regardless of market conditions, and provides a long-term framework for growth and stability. This also addresses a common question. Can competitors of strategy such as traditional banks like JP Morgan short MSTR stock to drain strategy's USD reserves? The answer is no. The USD reserve is fully controlled by strategy, and shorting the common stock doesn't grant access. To attempt to access the cash directly, an investor would need to own preferred stock, which is a completely different instrument. This is why the USD reserve acts as a real battery or safety net. It's insulated from common market pressures and ensures dividends continue no matter what happens to the stock price. The USD reserve funds the dividends while the digital credit tools let strategy continue growing their Bitcoin holdings. By using the equity, Bitcoin, and derivatives markets as needed, the system creates a self-sustaining cycle that delivers steady income, long-term growth, and it strengthens both shareholders and the Bitcoin ecosystem. Strategy's digital credit vehicle represents a new era in finance, a system where Bitcoin fuels a reliable dividend engine integrated across multiple markets, fully hedged against volatility and designed to grow over time. This model could even influence how traditional banks think about managing liquidity and delivering predictable income, showing that a Bitcoin-backed multi-market approach can create stability and growth in ways conventional banking has never done. If you made it to the end of this video, type Bitcoin in the comments to show you're awake, and don't forget to subscribe to stay part of the revolution.